Which type of risk refers to the possibility that an investor will not be able to sell a security quickly without significantly affecting its price? Option A, liquidity risk. Option B, credit risk. Option C, currency risk. Option D, reinvestment risk. The correct answer is A, liquidity risk. Which type of risk refers to the erosion of purchasing power due to rising prices over time? Option A, business risk. Option B, purchasing power risk. Option C, liquidity risk. Option D, currency risk. The correct answer is B, purchasing power risk. Which type of risk arises from the possibility that a bond issuer will be unable to make interest or principal payments? Option A, reinvestment risk. Option B, purchasing power risk. Option C, default risk. Option D, currency risk. The correct answer is C, default risk. Which type of risk refers to the possibility that proceeds from a maturing or called bond will have to be reinvested at a lower interest rate? Option A, default risk. Option B, business risk. Option C, currency risk. Option D, reinvestment risk. The correct answer is D, reinvestment risk. Which type of risk affects investors holding foreign securities due to fluctuations in exchange rates? Option A, currency risk. Option B, business risk. Option C, liquidity risk. Option D, default risk. The correct answer is A, currency risk. Which type of risk refers to the uncertainty surrounding a company's ability to generate sufficient earnings due to factors like management decisions or competition? Option A, currency risk. Option B, business risk. Option C, reinvestment risk. Option D, purchasing power risk. The correct answer is B, business risk. Which phase of the business cycle is characterized by rising GDP, increasing employment, and expanding economic activity? Option A, peak. Option B, contraction. Option C, expansion. Option D, trough. The correct answer is C, expansion. Which phase of the business cycle immediately follows the peak and is marked by declining economic activity? Option A, expansion. Option B, trough. Option C, peak. Option D, contraction. The correct answer is D, contraction. What does the Consumer Price Index, CPI, primarily measure? Option A, the average change in prices paid by consumers for a basket of goods and services. Option B, the total value of goods and services produced in a country. Option C, the unemployment rate across all industries. Option D, the average return of the stock market. The correct answer is A, the average change in prices paid by consumers for a basket of goods and services. Which type of unemployment results from normal turnover as people voluntarily move between jobs? Option A, structural unemployment. Option B, frictional unemployment. Option C, cyclical unemployment. Option D, seasonal unemployment. The correct answer is B, frictional unemployment. Fiscal policy refers to government actions involving, Option A, setting interest rates through the central bank. Option B, regulating securities exchanges. Option C, taxation and government spending. Option D, adjusting bank reserve requirements. The correct answer is C, taxation and government spending. Which of the following best describes monetary policy? Option A, the government decisions about taxation and spending. Option B, state-level regulation of investment advisors. Option C, corporate decisions about dividend payments. Option D, actions taken by a central bank to influence the money supply and interest rates. The correct answer is D, actions taken by a central bank to influence the money supply and interest rates. A zero-coupon bond, Option A, is sold at a discount and pays no periodic interest, with the return realized at maturity. Option B, pays a variable interest rate tied to inflation. Option C, can be converted into shares of common stock. Option D, pays interest monthly at a fixed rate. The correct answer is A, is sold at a discount and pays no periodic interest, with the return realized at maturity. Treasury inflation-protected securities, TIPS, are designed to, Option A, pays no interest until maturity. Option B, adjust their principal value based on changes in the Consumer Price Index. Option C, convert into shares of common stock. Option D, offer state tax-exempt interest only. The correct answer is B, adjust their principal value based on changes in the Consumer Price Index. A convertible bond gives the holder the right to, Option A, redeem the bond early at face value only during a recession. Option B, adjust the bond's principal for inflation. Option C, exchange the bond for a predetermined number of shares of the issuer's common stock. Option D, receive dividends in addition to interest. The correct answer is C, exchange the bond for a predetermined number of shares of the issuer's common stock. A 12b-1 fee charged by a mutual fund is used primarily to cover, Option A, the fund manager's personal salary. Option B, federal registration fees. Option C, custodial bank fees only. Option D, marketing and distribution expenses. The correct answer is D, marketing and distribution expenses. Which of the following best distinguishes a load fund from a no-load fund? Option A, a load fund charges a sales commission when shares are purchased or sold, while a no-load fund does not. Option B, a load fund is only available to institutional investors. Option C, a no-load fund cannot be redeemed for 5 years. Option D, a load fund guarantees a minimum annual return. The correct answer is A, a load fund charges a sales commission when shares are purchased or sold, while a no-load fund does not. A variable annuity differs from a fixed annuity in that, Option A, it guarantees a fixed interest rate for life. Option B, its payout value fluctuates based on the performance of underlying investment subaccounts. Option C, it cannot be held inside a retirement account. Option D, it is exempt from all taxation. The correct answer is B, its payout value fluctuates based on the performance of underlying investment subaccounts. Which type of REIT primarily generates income by lending money for real estate and collecting interest, rather than owning property directly? Option A, equity REIT. Option B, hybrid REIT. Option C, mortgage REIT. Option D, non-traded REIT. The correct answer is C, mortgage REIT. Under the Uniform Securities Act, which of the following would generally be considered an institutional investor exempt from certain suitability disclosures? Option A, a first-time retail investor. Option B, a minor with a custodial account. Option C, an unaccredited individual investor. Option D, a bank or insurance company. The correct answer is D, a bank or insurance company. Under Regulation D, a private placement offering is typically exempt from registration but limited primarily to, Option A, accredited investors and a limited number of non-accredited investors. Option B, any member of the general public. Option C, only employees of the issuing company. Option D, foreign investors exclusively. The correct answer is A, accredited investors and a limited number of non-accredited investors. Which of the following is generally considered an unethical or prohibited business practice for an investment advisor? Option A, disclosing fees in the firm's brochure. Option B, borrowing money from a client who is not in the business of lending money. Option C, recommending diversification across asset classes. Option D, providing a prospectus before a sale. The correct answer is B, borrowing money from a client who is not in the business of lending money. A wrap fee program bundles which of the following into a single fee? Option A, only tax preparation services. Option B, only life insurance premiums. Option C, investment advice and trade execution costs. Option D, only retirement plan administration. The correct answer is C, investment advice and trade execution costs. Before exercising discretionary authority over a client's account, an investment advisor must generally obtain, option A, verbal approval renewed daily. Option B, approval from a state court. Option C, no authorization if the account is small. Option D, written authorization from the client. The correct answer is D, written authorization from the client. Which of the following best describes an agency cross-transaction? Option A, an advisor acts as broker for both the buyer and seller in the same transaction, receiving compensation from both sides. Option B, an advisor transfers assets between two of their own personal accounts. Option C, an advisor recommends a security they personally own. Option D, an advisor trades exclusively through a single exchange. The correct answer is A, an advisor acts as broker for both the buyer and seller in the same transaction, receiving compensation from both sides. A state securities administrator generally has the authority to do all of the following except, Option A, deny or revoke a securities registration. Option B, impose a criminal prison sentence directly. Option C, issue a cease and desist order. Option D, require books and records to be produced for inspection. The correct answer is B, impose a criminal prison sentence directly. Which of the following best describes tax loss harvesting? Option A, selling only winning positions before year-end. Option B, deferring all capital gains indefinitely. Option C, selling securities at a loss to offset realized capital gains and reduce taxable income. Option D, converting capital losses into tax-free income. The correct answer is C, selling securities at a loss to offset realized capital gains and reduce taxable income. What is the efficient frontier in modern portfolio theory? Option A, the point at which a stock becomes overbought. Option B, the maximum leverage allowed in a margin account. Option C, the boundary between suitable and unsuitable investments. Option D, the set of optimal portfolios offering the highest expected return for a given level of risk. The correct answer is D, the set of optimal portfolios offering the highest expected return for a given level of risk. A correlation coefficient of -1.0 between two securities indicates, Option A, the two securities move in exactly opposite directions. Option B, the two securities move in perfect lockstep. Option C, the two securities have no relationship whatsoever. Option D, the two securities have identical volatility. The correct answer is A, the two securities move in exactly opposite directions. Which cost basis method assumes that the earliest shares purchased are the first ones sold? Option A, last in, first out, LIFO. Option B, first in, first out, FIFO. Option C, average cost method. Option D, specific identification. The correct answer is B, first in, first out, FIFO.